Hi, am I audible and visible? If one of you could just give me a quick yes. Awesome. So we just start off in a minute or so. So what we're going to talk about today is how you could make money by starting your old gold-backed stablecoin. Now let me start with the absolute basics. So obviously the first question that would come to your mind is why stablecoins? The second would be why gold? And then of course, why a gold-backed stablecoin? Now, when we look at the world today, we've begun to realize that one of the most successful blockchain use cases has been tokenization of real world assets. And in that, stable coins have begun to do very well. So, a classic example would be Tether, that has a market cap of over $150 billion and a daily volume which is more than 110% of its market cap, which means there is a genuine need for stable coins, and a lot of people around the world are actually using them for day-to-day transactions. Now, when we look at the stablecoin industry today, most of them are fiat backed, which means they would be either backed by the US dollar, the euro, Singapore dollar, or a few other fiat currencies. Now, when we look at 2025, there is going to be a lot of need and demand for de-dollarization. A lot of countries want to move off the US dollar for various reasons. There could be political reasons, economic reasons, but many countries are looking at alternatives to the US dollar. Now, when we try to look at these alternatives, let's try to go back in history and we realize that gold for the longest period of time has been one of the most important medium of exchange and store of value in the world. So for thousands of years, gold has appreciated. Human beings use it for industrial purposes, for jewelry, for so many other things. So naturally, it makes sense for us to reconsider using gold as a medium of exchange. So as you may be knowing, if you've studied about economic history, you'd realize that there was a time when most fiat currencies in the world were actually backed by gold, technically making them asset backed and not really fiat. But then over a period of time, a lot of countries started to go off the gold standard because they did not have enough gold. And they realized that they needed to create more currency to actually promote economic growth and development. That is what led the world to fiat currencies, which are not backed by any asset, they are backed by the will and the command of the government. So, now coming back to it, I believe there is going to be a very strong increase in the demand for such kind of asset backed stable coins, especially gold backed stable coins. One, for countries which want to do de dollarization, and second, genuinely for people or in countries where you do not have good and strong digital platforms. Like in India, we have something called UPI, which makes it very easy for people to buy and sell virtually anything with it digitally. So you could actually walk up to a small roadside vendor and buy a dozen of bananas and you could pay using a digital UPI app. Many countries do not have that. So they are also going to start moving on to digital payments. And that is where gold backed stable coins are going to come in. Now, if you are bullish on gold, then issuing your own gold backed stable coins can actually more than 2x your revenues. And let me explain how that actually happens. So let's say that you have a kg of gold which you have invested in. I know that sounds like a lot of money, but there are people who own a lot more than that. And the reason I suggest starting with a bare minimum of 1000 grams of gold is because then it becomes possible for you to get it custodied with a regulated custodian, like, for example, Brinks. So let's say you have this gold and now you have placed it with a regulated custodian. They give you a piece of paper which clarifies that they have this gold, and that piece of paper is actually negotiable around the world. Banks can even give you a loan against it. So now that you have that custody document, we enter into an agreement with you. So HYFI Blockchain could be your technology partner who helps you to set up this gold-backed stablecoin. And once the legal agreements are done, on the HYFI blockchain, you can then issue your own gold-backed stable coins, which are backed by this 1 kilogram of gold, which is kept with the custodian. Now, when a customer comes who wants to use your coin and he pays you money, which goes directly into your account, you could take that money through crypto, you could take it through card payments, you could take it directly through a bank transfer. The money comes straight to you. Now, if you have, let's say, and against it you have received $1 million of cash and issued coin, your assets have actually doubled. You continue to hold your gold and you are now holding the $1 million, which you can now invest. Maybe again into more gold, or maybe into other kinds of secure investments, government bonds, treasury bills. That's your call. That's the basic model of a stable coin. So if you look at what Tether does, that's exactly how Tether also operates. You give them the money, it goes into their bank account, then stablecoin USDT on various platforms, and as and when you want the money back, they return it to you. But till then, it's with them, interest free, and they invest it, and that's basically mainly their profit. So in your own case, your gold is appreciating, the money you've received against the gold also appreciates. And if you are charging a transaction fee for your coin, that transaction fee also goes to you. Now, in return, HYFI as a technology partner would take an annual fee from you, and an annual fee, a one-time fee to start, and an annual fee to maintain your entire tech platform. And in this, you get all the blockchain nodes, you get your wallet, a Telegram wallet, web-based wallet, managed wallets, everything is provided. So you don't have to bother about the tech part of it. So that's kind of the whole concept. This is only the first session that I'm having with you. I'll be having more such discussions. So feel free to look at this video later, make your list of questions, send them to me, and I'll cover them during next week's session also. Now I'll wait. If there are any questions, you can just type them in, and one by one I'll answer them. So I have a question. Why create a gold-backed stable coin and not any fiat-backed? Okay. Now, when we look at the other coins, like I mentioned Tether to you, now Tether also has started their own gold-backed stablecoin. There's another entity called Paxos, which has launched its own gold-backed stablecoin also. So you are going to begin to see more and more people and companies issuing asset-backed stablecoins. And when we look at assets, gold is the most liquid and the most globally in demand asset. And that is why I strongly recommend gold. Of course, there are other things that these could be issued against. You could do it against silver, but then the cost of holding silver with a custodian is much higher, because $1 million of gold is very little in size and volume compared to $1 million in silver. You could do it against other metals like copper, iron, but then the point is they're not globally considered a stable store of value, and the cost of custody becomes very high. I have another question. What would be the minimum size of gold to make it feasible? So the minimum size would be 1 kilogram. That's 1000 grams of gold. Price changes depending on the country you are. The reason I say one, because most custodians would require you to have a minimum of 1 kilogram of gold with them. But in the country that you're operating from, or where you want to launch your coin, if a custodian is ready to give you services for below, then you could even do that. From an economic point of view, it doesn't really make much of a difference. You could find it profitable even for smaller quantities of gold. So I would say the number one thing to consider would be the custodian, because that's very critical. There's another question. What blockchain platform should I use for my gold-backed stablecoin? Key points to consider, and why HYFI? Sure. So, of course, you can look at platforms like Ethereum and Solana and others also. The reason why HYFI is built, it's built only for tokenization of real-world assets. So there is, first of all, zero gas fee, which means fundamentally the platform, the way the blockchain is designed, it does not have any gas fee. So your customers could make transactions at zero cost. If you decide to add your own transaction fee at the software layer, in that case, that entire money goes to you. But if you use other blockchains, then the biggest problem would be there would be a gas fee which is payable to a third party, could be a miner or a staker. That's problem number one. Problem number two would be that of legal formalities and regulatory compliances. So here again, we've built it from such a point of view. It's a permission blockchain, which means you can decide who can and cannot deal with you. You can do the proper KYC, and without that, people cannot even have an account to transact. So it becomes much easier from a regulatory point of view. Having said that, you could do the same thing on virtually any other layer one blockchain. You could even use an L2 for this. But just remember your choice when you're making. Always consider the legal issues and the gas fee when you decide. There's another question. Typical question. Okay. What is the range of returns one can expect? Good question again. So, first of all, the original gold that you start with, that's going to earn, let's say you presume a 10 to 15% per annum, that's going to keep earning that for you. Then it is the money that you've picked up against which you issued the stable coin. Now it depends on where you invested. Now, if you look at Tether, I would strongly recommend go to the Tether site. and they've kind of shown, what they invest the money in and how much profits they generate from it. So now it depends on what you do with this money. Now let's say that money is also put back into gold. It could give you a further 10 to 15% return. You could put it into any other asset because it's your stable coin. You have to declare to your user what you're doing with the money. After that, it's totally your call. And if your users are happy, you can do whatever you want with that money and invest it wherever. Ideally, you would be able to get about another 10% per annum on that. And then comes the transaction fee. You could decide to charge it or not charge it. If you are charging, we recommend that you do about a 0.1% per transaction. So that's a good fee to start with. Now, it again depends on what kind of audience you are going to have. If you are catering to the B2B audience where the amounts could be larger, you could have a different fee. If you're looking at the retail audience, your transaction amounts could be very different. You could also be looking at an audience who simply wants to hold the gold in a digital form. And maybe in their country, it's not easy to buy gold in an electronic form. They may not have gold ETFs, for example. So again, there you could have different fees. So these models will have to be developed. We can look at what Tether and Paxos are doing and then build and improve your model. And accordingly, you could look at your profits. Uh, what should be the ROI for 3 years time horizon? So, like I said, it would depend on how much gold appreciates and what you do with the money that you're collecting and the transaction fee. I hope that answers your question. How do I ensure the credibility of my gold bank? So now, when we talk about credibility, that's where the custodian comes in. Now, if you look at Tether, they don't even tell you, they don't really give you regular proof of reserve where the money is. Once in a while, they give you some kind of a statement. I would say don't do that. Tether has already built a goodwill, so they can get away with it. But if you're just starting out with your coin, you should be able to show your investors what you're actually doing with that money and where the gold is actually being held. So here, documents from your custodian, which will be available on your platform, that will give the biggest confidence to your investor that, okay, they have that much gold with them against which they are issuing the coins. The money being raised by you, if you can also do a monthly report on that showing your bank statement, I think that would be more than enough and people would have full faith. And thirdly, of course, you would initially market your stablecoin to your community. So let's say you have a strong social community network, you're part of a business community, you have friends, you have people who trust you. They should ideally be your first consumers. How do I differentiate my gold-backed stablecoin from existing options like? So that's a very good question. Now, I agree that Tether and Paxos have started, but that doesn't mean the entire business is going to be only run by them. I mean, you take an example of the blockchain world. Ethereum was the first general purpose blockchain that came in, but that didn't mean Ethereum would rule forever. Today we have Solana, which is actually doing more transactions. So over time, you will develop unique aspects to your coin. So let's take an example. I mean, a very simple example would be, okay, Paxos is doing this out of the US. What about countries who cannot deal with the US because of political reasons? Well, that becomes one target audience for you because they anyway cannot use an American stablecoin. That could be your one differentiator. Second differentiator could be which currencies you're supporting. They may support US dollar redemptions. You could support other local currencies coming in. Then look at your local advantages. So if you talk about small business people, retail people, or even larger businesses in your city, in your state, in your country, they may not be comfortable dealing with a entity in another country who they don't even know. They may prefer to deal with you because you're available in their city or their state or their country. So all these are some of the advantages that you can actually offer. You can come out with better transaction fee models, faster redemptions. Over time, I mean, I'll have more discussions, I'll come out with more ideas, and we'll start documenting these. So there are lots of ways in which you could be better. Uh, have you thought about pooling a community? Could you explain what exactly you mean by that, Anil, about pooling a community? Maybe if you give me a little more information on that. In the meanwhile, if there are any other questions, please feel free to put them. What are some potential indirect revenue streams for gold-backed stablecoins? Something like a tertiary income. Well, that's a very good point that you've asked. So as of right now, when I look at it, there's the returns from the gold, returns from the money which you've received, and the transaction fee. As of right now, I think these are the ones. But definitely, we are also thinking about what other kinds of revenue models can emerge. And definitely, as we figure them out, we'll share them with you. Bring together investors to launch. Okay, so if you're talking about us doing it, we don't plan to do that because that creates a conflict of interest. We want to be the technology platform which enables this for everyone. Now, if we start our own coin, then we kind of have a conflict of interest. Why would we promote someone else's? We'll then start promoting our own coin. We don't want to be like Tether, who runs their own coin. We want to be the tech platform, and we want people like you to become Tether or Paxos and run your own coin. That is our model. We are a blockchain. So we are the tech guys. We don't want to get into the financial aspect of actually running our own stable coins. I hope that answers your question on it. I have a group of high earning traders. How can I leverage this idea? So that's a very good point you have, and I actually have some suggestions for you. But I think it's better if we discuss them one to one. So maybe after this session, you could drop me a message on Twitter, Insta, LinkedIn, anywhere, and then we'll have a one-to-one call, and I'll be able to give you some very good ideas on what you can do. How can I ensure liquidity for my gold-backed stable coin? Although gold is very liquid, how can, yeah, okay, that's a very good question. So when it comes to liquidity, now, like I said, you've got that let's say 1 kilogram of gold with the custodian, and now you've received money from people. That is where the liquidity comes. Your original gold need not be part of the liquidity. That can lie safely with a custodian. Because when you're returning money to people, you're redeeming the money they already gave you. So your gold is safe. The extra money that you got against that gold, against which you issued a coin, that needs to be kept liquid. Now let's look at how the banks work. When you go and put your money in the bank, they don't maintain that entire amount in cash. Under the laws of their country and the Reserve Bank or central bank rules, they would have a cash reserve ratio and a statutory liquidity ratio. Similarly, you have to over time develop your own liquidity ratio. That you have to figure it out. I mean, it'll happen over time. That if I have issued $100 worth of stable coins on any given day, about 10% gets redeemed and 5% more can come in. So I need to keep only 5% liquid, and I can put the rest into an investment. So this is something which would vary each coin. It's very difficult to predict it in theory what that amount would be, but you would build that over time. So I would say initially when the money comes in, keep 100% in the bank for a few days. Then start seeing on an average day how much new coins are issued, how many are redeemed. And then slowly over a period of time, you'll figure out, okay, only 10% needs to be kept liquid and 90% I can then invest. So that's something which will be developed over time. Uh, Okay, I think, yeah, that's all the questions so far I've answered. Again, if there are more questions, feel free to put them. And the next session, I also plan to do a little bit of a tech demo to explain to how the whole thing would work and how the tech would look. And that will also help you guys. Any opinion about CBDC? Sure. So CBDC or central bank digital currencies is an interesting concept where the central bank of the country says instead of banks running the money system, individuals like you and me, citizens of the country, would open an account with the central bank, and then on a blockchain they issue us the fiat. Now, practically speaking, it would make no difference to an ordinary person. Today you have your money in an electronic form in a bank app. Tomorrow you have it in the app by your central bank. Other than that, it makes no difference to you. So while CBDCs are an interesting way to go, they don't really compete or compare at all with a gold-backed stablecoin. They still are pure fiat. So another problem with fiat being, how do you make global payments? I mean, every country doesn't accept every currency. So your people that you're dealing with, they may not deal in your local currency. You may not deal in their local currency, which is where I believe gold-backed stablecoins will emerge as a globally acceptable currency because it is actually backed by physical gold held by a regulated custodian. Any other questions? I'll wait for a minute or so. If there are other questions, I'll take them. Okay, so I think that was a nice, interesting session. I hope you guys found it useful. If you're having a look at this video later, please make a list of your questions and send them to me, and I'll answer them during next week's session. Have a great week. Bye bye.